Crude oil hit a 5-month high overnight as markets brace for Iran's response to US bombing. So are investors rushing to safe havens? Brent crude has pared some of the gains it saw early on Monday as markets watch and wait for a reaction from Iran. Equity markets are cautiously lower while the dollar has firmed. Jane Foley is head of FX strategy at Rabobank. Jane, the dollar's stronger against the euro and the yen this morning. Does that reflect the US's lower exposure to higher oil prices?
Well, it certainly does, and it certainly affects some safe haven. But perhaps one of the most remarkable things, and we could say this perhaps about the reaction in the oil price, the reaction in the gold price, for instance, or even the reaction in the equities, is that whilst there has been a move to safe haven, the move has not been that marked. And it would appear that right now, and of course, the news flow can change quickly, but right now, it would appear that the market is betting that that Strait of Hormuz will not be closed, that oil supply will not see huge amounts of disruption, and therefore the levels of risk, or at least risk aversion that we've seen today are really quite muted.
Given this notably muted reaction, do you think we could see more dramatic moves if, for example, the Strait of Hormuz is closed?
There's a really strong consensus in the market that if that were to happen, well, oil would suddenly be somewhere over $100 a barrel. And certainly we would see a lot of other reactions to that. So, for instance, that would create a huge amount of inflationary pressure in different parts of the world. Japan, for instance, gets an awful lot of its oil through from that region. That perhaps is one of the reasons why the yen is underperforming today. So there would be more fears about stagflation in various economies, maybe even recession again in parts of Europe. But that's not what the market is perceiving today. That could happen, of course, but the market's thinking, well, Iran won't do that because that could really annoy China, who is still an ally of theirs, and it also could be to the detriment of their own economy.
As you say, Asian currencies are weak this morning. So is the euro. Are traders saying that the European economy is particularly vulnerable to spikes in oil prices?
Well, the Eurozone economy, yes, of course, it would be vulnerable. But yes, whilst the euro has fallen back against the US dollar, it's actually one of the better performers within the G10. The Swiss franc is sort of neck and neck with the dollar right now. That, of course, is an established safe haven. And the euro on a one-day view is in line. So the euro holding up relatively well. The G10 economies right at the bottom of the pile on the one-day view are the Aussie, the New Zealand dollar, for instance, and those currencies tend to react poorly to a risky environment.
You mentioned we've seen strength in traditional safe havens like the Swiss franc. There's been a lot of debate in recent months whether the dollar still counts as one of those. Did today's moves show that it does?
I think the dollar is still a safe haven. I think we need to really discern the differences between the exceptionalism, the US exceptionalism trade, which of course has been seeing a lot of movement in the last few months and indeed the last few years, a lot of money into the US on this exceptionalism view, and then this year money out on the exceptionalism view, or at least the view that that could be shifting away from the US. But at the same time, the sheer depth of the US capital market, the fact that so many invoices around the world are still printed in US dollars, about 50%, those factors mean that the US dollar still holds a crown as a safe haven, and we've seen evidence of that again over this weekend.
Do you think the muted market reaction so far could potentially be overly optimistic and even risky?
It certainly could. And this is the difficulty that asset managers and speculators have. They could take a very risky view, the fact that we could potentially have oil over $100, we could have more recessionary risk. That, of course, would mean that they will be selling riskier assets more heavily than they are currently. They're selling stocks, for instance, moving around their positioning on the currency market, buying more dollars. But of course, the best guess, it would appear right now, is that that Strait of Hormuz will not be closed. And if that is what ends up being the case, then those positions on a more risky outlook would just be plain wrong. So what we're seeing in prices this morning is just the cumulative view that maybe we will not have the worst case outcome from this conflict. But as we all know, that news could potentially change fast.
That was Jane Foley of Rabobank. Don't forget, you can watch more videos on Reuters.com.